Hey everybody, it is Friday the 19th of July 2013 and this is Brian Shannon from alphatrends.net speaking. Let's take a look at these markets here and how they finished the week out. We'll look at the numbers first. The S&P 500 was up just about 1%, NASDAQ down about 1%, and they were hit basically because of the semiconductors and some earnings in there, as well as some other high profile earnings that didn't go so well, the reaction. And the big winner was oil this week, and then the financials, which are up 26.5% year to date. Really amazing move for those financials when so many people just 2 years ago were writing them off as dead and saying it's going to end badly and this rally has, it's up for no reason and it's going to end badly and all that sort of thing. If you look at those financials, they've just been in this fantastic uptrend that looks like it should be able to continue from here, maybe perhaps up towards the 23, 24 level. Anyways, let's take a look and go in the order that we typically do, which is to look at the S&P 500. You can see it did exceed the intraday highs from back in early May, and we closed at an all-time high once again too. So looking at that monthly chart, there was no triple top or really even a double top, but that's a different story. But we continue to move higher here, and the path of least resistance continues to favor the buyers. So when we take a look at a 30-minute chart, it becomes real obvious why I spend so much time focused on where is the market in relation to the 5-day moving average and what's the direction of that 5-day moving average. You can see that's the orange line here. When we were looking at this pullback that came down to the volume weighted average price year to date, we were looking for the potential of a short sale back here. You remember that I was looking for, if it broke below here, that we would get short. Well, it never did that. Instead, the market has been continuing to march higher, and we've been focused on some good positive setups, that is to the long side at Alpha Trends, and that continues to be the path of least resistance. That's what the market is telling us to do. So I had an idea of what I thought might happen, but to have an idea and to implement it, you have to wait for the actual confirmation from price action. So we want to anticipate the scenarios, but wait for price confirmation before we get involved. That's very important and something a lot of people don't do. They get short because it's back to the 50-day moving average. They get short because it's at a 61.8% retracement. The fact is, the only reason to be short is because the market is making a series of lower highs and lower lows, and we're not seeing that. We continue to see higher highs and higher lows above this 5-day moving average. You can make every argument in the world that the market's extended or that the volume is light, but all of the rallies that we've seen in the last several years have come on diminished volume, is what we've been seeing. So again, it's only price that pays. You can't take volume to the bank. Volume is important, more so for individual stocks, but not so much for these markets. Just focus on the trends. That's what's going to keep you on the right side of the market 99%. Well, I'm just throwing numbers out there, but the majority of the time. The fact is, no system is going to be keeping you in the right markets all the time, but with trend trading and some simple rules such as higher highs and higher lows, that's what we want to be focused on. If we look at what we were looking at this week in Alpha Trends was the volume weighted average price since Chairman Bernanke spoke here a week and a half ago, and then he spoke again. We got more upside action in the S&P 500, and I think that next week that 168 will be an important level, and then we have all these areas where the market really has consolidated a bit, so really just around this 167 level, and then 168 to 168.25 really are these important. These are the more important bands of potential support. So 166.75 to 167, and then 168 to 168 and a quarter. So again, broken record, path of least resistance is higher. Don't sell short into this. If you did in the Nasdaq, maybe you got lucky here after some earnings. But again, it broke some support here today, but it was too late to really do anything with it because of the gap lower. What we were looking at was we were looking at this level as support, and that if it made a pattern, if it broke below it and made a pattern of lower highs and lower lows, and this 5-day moving average continues to turn lower, perhaps then the Nasdaq will be in for a deeper retracement. If you look at the just the recent rally and take some Fibonacci off of that, you can see here that a 38.2% retracement would get us down to about 73 and a quarter, and we had some prior resistance in that area as well. So perhaps perhaps that's where the NASDAQ is heading. But, the next 2 weeks, we're going to still have a lot more high-profile earnings reports. So for now, in the NASDAQ, what we want to do is we want to look at this a little bit more cautiously and say that, the trend line was broken. We broke below that VWAP, the 5-day moving average, rather, and now perhaps we're going to at least correct a little bit more through time. Maybe we get a pullback down towards that 20 and 50-day moving average. That puts us down in that 73 area, and it's not unreasonable to think that that may happen. The Russell 2000, however, just continues to march higher into its all-time high territory. The 5-day moving average in here as well. I mean, if we break below the 5-day moving average and close below it and hold below it, well, then we're probably in for more of a correction on the Russell. And you could argue that, well, since the NASDAQ was correcting, that maybe we should become more cautious. And absolutely, you don't want to chase a market like this. You want to look at it and say it's extended. I want to look at individual stocks, and you can see this trend line has been broken just due to time and the flatness that it basically had today. But it was up a little bit today. For the week, though, up 1.5%. Year to date, 23.7% in this Russell 2000, just absolutely running over everyone who gets in the way on the short side. So in the Russell 2000, I think the more important levels next week will be first this 104 area where we have that 5-day moving average, really about 103.75, and then we would start to look at some of these retracement levels and think that if it does pull back, maybe it gets back down towards that $100 level. That had been a bigger area of resistance, which has the potential to become support, but that's a pretty deep pullback from here. I would think that maybe we get a little bit more traction, down near this 102 level, and I know a lot of people have been looking for this gap to get filled and that gap to get filled, and eventually, they will one day, but who knows when that day is. The semiconductors are really what hurt the NASDAQ more than anything, and they were hit because of Intel, and Intel gapped lower on its earnings. And it's interesting, on Thursday, someone was pointing out to me that AMD, it looked like people were buying in front of the earnings, and if you look at what happened, people were buying it in front of the earnings, and it always, to me, it never makes sense to buy in front of earnings because you have things like this happen. Today, AMD was down 13% and put a little bit further pressure on these semiconductors, which was down, again, the semiconductors for the week, they lost 1.7%. Still up close to 20% year to date, but if you're in the stocks when they're doing that, it's obviously no fun. The semiconductors gapped down on Thursday, and they are continuing lower highs and lower lows below this declining 5-day moving average. So the semiconductors suggest that, yes, we're down to the 50-day moving average, and perhaps it begins to stabilize in here. But I definitely wouldn't buy it because it's at potential support. I wouldn't buy it because we do still have it below the declining 5-day moving average, and I wouldn't short it either because we're in an area where it has the potential to find some support. So I think it's just best left alone. Financials closed up a penny today, and that put them at multi-year high once again. Looking at that weekly chart, they perhaps have continued upside to about the $23 level. We've been focused on 20 for quite a while. It backed off of that 20 level initially, and we've just run right through it once again here. If you look at it, we're still making higher highs and higher lows above a rising 5-day moving average. And even when we broke below that 5-day moving average over here, it didn't make the lower high and then the lower low to confirm that it would have been a good short. This is, again, the direction of the moving average is more important than one or two closes above or below, and that 5-day moving average is really important for the intermediate term trend. So in the week ahead, our first important level will obviously be, or hopefully it's obvious, that this 20.5 level that had a little bit of resistance would become our first potential support, and then we have at about $20.30 as well. But the trend is higher. I definitely wouldn't recommend chasing it. Gold was, what did gold do for the week? I guess gold was up a little bit, up 0.8%, 5% for the month, but it's still in a primary downtrend. In my mind, it's just another blip in a downtrend, and it's going to take more time. That if they don't scare you out, to wear you out. If you're into buying something that you have a 50-50 chance basically of gapping up or gapping down, it seems like, then perhaps gold is a good trading vehicle. I think you understand where I'm coming from, what my opinion of that is. Yield interest rates did come down a little bit this week. The 20-year bond did rally a little bit. If we take a look, it was actually up 1.3%, the TLT, which is a 20-year bond. So we have rates coming down a little bit, and they've experienced quite a large decline, but there's the bonds are still in a downtrend here. So I would not be looking at a place to be buying that for sure. Home builders are trying to recover, and I usually don't talk about those, but they are trying to recover here after this move lower, and they're probably more neutral than anything. With those interest rates still suspect, that makes it difficult to have a lot of confidence in the home builders. Shares of Apple this week were slightly higher for the week, and we came down. We rallied up rather to the conjunction of that 50 and 100-day moving average. If you recall, I've been focused on this as this Fibonacci off of here, that it was potential resistance, and that this 433 to 433 was potential resistance. So we ran up towards that level. We are now below a 5-day moving average. The 5-day moving average is declining. They have earnings next week. I don't see any advantage to being involved in this stock right now. I'd say wait for earnings to settle down. The stock to settle down after earnings next week. Otherwise, you're just taking a shot. And again, with AMD, taking a shot, or Microsoft, if you take a shot on their earnings, you'd say, hey, it's in an uptrend, and news and surprises tend to follow the direction of the trend, but then we get true surprises where the stock not only gaps lower, but continues lower on the day. And we saw it this week in IBM. We saw it in Intel, as we mentioned. We saw it today in ISRG, where the trend was already lower. We saw it in Google today as well. So a lot of damage in some of those names. It's surprising that those bigger stocks, that the NASDAQ wasn't down more than it was. In Alpha Trends this week, we focused on some of the solar names earlier in the week and got stopped out a few of them. The star there was GTAT, which has a big short position. But there were a lot of good movement in the solar, and I think one group to watch that we started really focusing on Thursday afternoon was the oil service group. Right around in this area is where we really were starting to pay attention to them. In particular, Halliburton right in here, and Halliburton had great follow-through today. But the oil service index, if you look at the weekly chart here, a lot of energy built up in here with these higher lows and the repeated cracks at that resistance. It's broken out. This looks like a group you could be an investor in. So I would say that if you're an investor time frame, then you look at these stocks. For swing traders, there's going to be great opportunities in stocks like Halliburton that has a longer term nice sideways action. You've got PDS. It looks like it's getting ready to break out here. You've got WFT, which is Weatherford, and a whole bunch of other ones. These are the types of setups we're looking at each day in Alpha Trends, looking for the low risk, high probability setups where they can continue to move higher, where they have bigger upside a lot of times. But we'll trade them, we'll day trade them if that's what the market tells us to. We'll swing trade them if that's what the market tells us to. Come on by, take a free trial for 7 days, and I guarantee that I will educate you, and I guarantee I'm going to bring you a lot of good ideas and help you learn how to minimize risk and minimize your losses. Thanks for tuning in.